Welcome to yet another episode of the Generative Product Show, where in today's episode we talk with a guest who truly embodies the journey of grit to capital. Joining in as guest today is Vic Dai, who is not only a seasoned investor, but also he's a repeat founder who has a track record of 3 successful ventures. He has had exits delivering 15x for investors and in general $300 million in revenue, scaling products from 0 to 1, from bright being a solo founder to leading over 500 employees. We talk about the Vic who not only channelizes his experience into investing into cognitive AI ventures, but also leads hands-on grit of a CTO while hand-holding leaders to scale, move purposefully, and fix things. Yes, that's his motto, not break things, fix things, and captures both urgency and disciplines required to bring ideas into impact. So in this episode, we'll talk about how to build execution pipelines at scale. How do you build startups which actually scales? So Vic is not only an academic theorist, he comes up an experience of building, scaling, selling, funding, and coaching startups, guys. So how can you miss this episode if you're a founder who is navigating his first inflection point of traction, or if you're an enterprise leader who wants to distinguish between signal and noise? You cannot miss this conversation. Must listen conversation of grit to capital with Vic Ghai in the Generative Product. So the VC world, your investment thesis, the AI world, and why don't you introduce yourself?
Thanks, Aswajit, for having me here. Good to see you from the last time we met in Palo Alto.
But yeah, I saw your speech in Palo Alto. It was really interesting. Like, you want to invest on technical founder and really support them, not just invest. Why do you want to pick only technical, not business?
Invest in something real rather than something that just appears like a pretty user interface and a pretty demo. Most VCs rely on technical advice. I prefer to understand it myself.
What mindset should change fundamentally and how they should operate?
Start thinking about not just the best decision you will make, but frameworks in which the other people can make decisions, like as if you would have been there. You're not going to be 100% as good or as accurate, but at least you are able to get that framework out, so then they don't have to come to you and rush to you or wait for you for every decision.
You never know what to do when you get a punch in your face. Like, when you get a punch in your face, you are blinded. Right? So how do you distinguish between persistence and stubbornness?
The founders have to have a grit. One type of grit is just working 80 hours a week minimum and pushing for rejection. I think that is natural for a lot of founders. And if you don't have that, again, you're in the wrong business.
Spread yourself too thin by investing so much, like beyond your capacity, and less investment, but more on a particular founder, really help him be successful.
It's really the power of us three. For 3 of us kind of make 3 plus 3 into 9, right. not just individually. Yeah, I would not be able to do it if I was a solo GP, and that's an issue with a lot of other smart funds out there.
I thought, like, from Top Gun you wanted to be actor. You're handsome enough to be actor. We're talking about AI movie. You're like acted in 20 films. Oh man.
Actually, you could be. You probably can be very well be an actor.
Oh, right? I did some acting in my school stage. So
okay.
Never after that. Yeah, we'll produce something. We'll produce an AI movie.
Absolutely.
Okay. Hi, Vic. We've been chatting for a long time to have this podcast. Welcome to the Generative Product Show podcast. We can start with your introduction to begin with. Then I'll deep dive into more on the VC world, your investment thesis, the AI world, and so on and so forth. So yeah, why don't you introduce yourself to our audience?
Yeah, thanks Aswajit for having me here. Good to see you from the last time we met in Palo Alto. I'm Vic
Yeah.
Dai, I'm a managing partner with G2C Ventures with an early stage fund, primarily focused on investing in seed stage companies focused on enterprise AI.
Perfect. So, what was the motivation? Like, where was this shift to investment from being an operator and having led, been a CTO and having led so many people? What was the shift to enter to the world of investment? Like, is there any trigger, or it was like you always had that ambition in mind? No, I want to
You
give
know,
it a go.
I've always been an entrepreneur myself for the last 25 years. So by the same time, I've been angel investor in several
Mm-hmm.
companies. Me and my venture fund partners, Sunil and Amar, we've all been angel investing for about 10 years, a lot of deals together. And we saw a pattern of investing in great either business or technical lead founders who had issues of scale. Some of our
Mm-hmm.
investments were super successful, and some of the investments were not that successful. And we started sort of informally coaching and becoming a informal accelerator. So we thought, let's get our energy together and actually create a fund which is primarily
Mm-hmm.
focused on founder scale, especially technical founder scale from
Okay.
one person to 100 million ARR type company. And
Okay.
we thought the best way to do it is take our lessons learned for the last 25 years or so we've been in the similar business and help the
Mm-hmm.
founders out with a fund where we can bring in a lot more resources than just us individually. So that's really what the core motivation.
Perfect, perfect. Yeah, I saw your like speech in Palo Alto. It was really interesting. Like you want to invest on technical founder and really support them, not just invest, but you want to give a ecosystem connection and so on and so forth. So why did you pick a technical lane was one of my curious question. Like you are from MBA and obviously you are a CTO. Was that the reason or like why do you want to pick only technical, not business co-founders, if you can throw
Yeah,
some lights?
I learned early on that I can't really evaluate what I don't understand well. So, for
Yeah,
example, when I'm looking at an AI startup and their approach, I want to
yeah,
know a little bit more than that. Hey, they have this great UI. I want to know what's behind the scene. I want to understand,
yeah,
is it just a wrapper or a traditional LLM, which is a lot of companies I see,
yeah.
or do they have something unique? They have something unique the way they approach model training. Do they approach understanding the domain? Sometimes I even help founders with their code. I mean, I can roll up my sleeves and do whatever is needed, but really, I wanted to invest in something real rather than something that just appears like a pretty user interface and a pretty demo. Most
Mhm.
VCs rely on technical advisors. I prefer to understand it myself.
Perfect, perfect. That's a great reason to do it. And so one of my important question is you talked about scale. Like you have scaled teams from say 1 to 500 plus. So what's the inflection point where a founder needs to fundamentally change from like managing a small team because it's a different ball game. Some people say the same person cannot lead say he can lead a team of 10, 20, 100, but above that maybe the same person may not be a good leader, or maybe if it scales above thousands you need a different type of leader. So that's a change, right? So what do you think a founder should understand, what mindset should change fundamentally on how they should operate after a certain number? Like, what is that inflection point where a founder needs to
Yeah,
change
no,
the
I
mindset?
work with founders a lot, where early stage they're the one who are really leading and making all of decisions.
uh,
But personally, I feel like there comes a point very quickly, even when you are a 10-man team, that you don't want to be the founder who's trying to
yeah,
approve every decision, right? Every model
correct.
tweak, every customer
Yeah.
demo. You want to become the founder. The inflection point is start hiring people not just for their skills but for their judgment. And
Right.
I see that happen when you are going from, 1-person team to 10-person team.
Hmm.
But I've seen a recent startup where I was involved where we could see they were slower in, than their competitor in terms of rolling out different feature set,
Huh.
because just the inertia was built by the founder themselves on they wanting to review every decision. So one of the early advice I have for them is, start either hiring for judgment. At the same time, start thinking about not just the best decision you will make, but frameworks in which the other people can make decisions, like as if you would have been
Hmm.
there. They're not going to be
Yeah.
100% as good or as accurate, but at least you are able to get that framework out, so then they don't have to come to you and rush to you or wait for you for every decision. I think that
Right.
happens when you go from 10 plus to
Hmm.
50 plus, and definitely when you're 75 plus teams, you can't remember every person's last name anymore. It's super important that the founder
Yeah.
starts really taking a back seat. One of my best lessons is, if in good decisions can happen without doing the meeting, means scale is working. If you are
Yeah.
have to be in every decision, and you are sort of
Right.
the hero of the movie every time, something
Right.
is wrong. You got to really look seriously about it and change it. You can
Right.
be the Rambo in every meeting. You got to let other people do it.
Definitely, definitely interesting. People want ownership, so if you don't give, I mean, they will just run away. I mean, they need
Oh,
that
that's
ownership
that's a big
also.
part too.
Yeah.
People will take ownership if you give it to them, but if you don't,
Right.
most people will actually not be even engaged in the call and thinking,
Right.
Aswaji is going to make the decision, so I can kind of just be on the call and zone out. I'm not
Correct.
listening, but if I'm taking the decision, I'm way more involved, and that too
Yeah.
for
Yeah.
everybody.
No, that's an interesting band because I was listening to the Nvidia founder, so he like leads around 60 to 70 direct reports, but he's 25, 30 years into the business. Obviously, it depends on the size, overall size of the company also, right? I mean, say Mark Benioff, he has been the CEO from first to, I mean, he would have started with a small team. Now he's leading a big team. He's still the CEO. But definitely an interesting bent of mind that you need to delegate, you need to understand what is the right team size, where there will be a manager on top of say 30 people or 20 people, depending on your nature of business, right?
Yeah, I
So,
think I think like even in Jensen's case and Nvidia,
yeah,
I think his message is that it's not that I have 60 direct report. That means I need to approve everything for those 60
right,
people. In fact, he has 60 direct reports or 60 or 70, more so because he can be in touch with what's the reality of the business,
right,
but at the same time still empower the each business owner or engineering leader or sales or marketing leader to still make their own decisions.
yeah.
Just be more focused on what needs to get measured rather than
Yeah.
making every decision yourself.
Perfect. Yeah, that's you hit the right bullet points here. Let's go on to other topics. I wanted to ask something about your like how do you help founders? You say like when you move fast, you break things. There is a quote, right? I mean, move fast, break things, or whatever. Like how do you move purposefully and fix things rather than
Yeah.
always? I mean, that's have been one of your mottos. I was speaking also. How do you fix things for others who move fast?
Actually, that's a term I borrowed from a very dear friend of mine who actually
Yeah.
gave me a sticker of move purposely and fix things maybe about 15 years
Okay.
ago. And it's been on my laptop and so on since then. And I think it really is that I've seen too many startups, both friends as well as companies I've invested in, where there's a rush to roll out feature, the rush to roll out or get in front of the customers without putting proper, especially in the age of AI, without putting proper guardrails, right? This is
Right.
where if you move too fast in the enterprise world, this could cost you $1 million in contract. If you move
Okay.
fast in consumer, maybe a little bit more forgiving. My Netflix always gives me wrong recommendation, but I don't change my Netflix subscription for that. But if I give
Hmm.
a wrong recommendation to a procurement person or a salesperson, most likely they'll not trust me next, and that'll lead to breaking things. So
Okay.
what I really learned, and myself also the hard way, that the mentality of move fast, break things do not work in enterprise AI.
Hmm.
If we have founder we work with where they had a application for pricing, but not having proper guardrail.
Hmm.
Maybe 20% of the time it did not give the right responses, and that led to a project not getting closed because business users want
Hmm.
a very good fail-safe mechanism. They're not used to applications where they're only 80%
Yeah.
right. 80% wins
Correct.
demos, but 20% error rate is what will kill an application from going from pilot to production. So I
Hmm.
would say, move purposely is really in the age of enterprise AI, really have to fixate it on deployment, not just demos. And if you take that mentality, then purpose becomes like, how do I really serve the user long term, not just a cool demo or win a pilot.
No, no, coming to that point, because yeah, we cannot just break things in, you're saying in enterprises, because the error, the ticket size is high, and the it's affecting the whole enterprise. But B2C might be, it's just a consumer effect. You can always fix quickly in B2C
Right,
environment.
right, right, right.
Is your point of view? Yeah, yeah, definitely, that makes sense. And what about product market fit? You said you should not launch, but won't that delay stuff? Like, say, should you wait for a product market fit to launch the full scale version, or should have a MVP, test it out in the market? Like, say, in the B2C environment, okay, you're starting up, right? We cannot have everything perfect. So what is your idea about when should you launch? Like,
Hey,
should
Ashley.
have a, am I frozen? Yeah, you're good now. Sorry.
Yeah, I think we froze for a second. Yeah.
Yeah, now it's good. Yeah. Sorry, I was saying, like, say, when should we launch? What is the right point to launch? Say we're building a MVP, the first version of the product, and we should minimize the dimension and launch it, or we should wait for the right product market fit and then scale. What is your point of view? We should make it perfect
I,
and
I,
launch, or
I actually think you should definitely launch early, but with design partners, not end users right away who don't know
okay.
you well, at least in the enterprise AI. Launch initially with some design partners. Now, that could be first set of 10, 20, 30 users,
Yeah.
or, first set of 10 or 15 companies that you launch with,
Yeah.
and iterate, get
Yeah.
user feedback. Not so much ask about what features they want, but understand
Yeah.
how their business works today and how are they using the product. What kind of decisions they make based on the product, how often do they log in, how many times a day, and so on. Once you have done that for about 6 months or so, you get a good idea of, is the usage increasing or decreasing. Decreasing, of course, you
Okay.
got to address few things because users are either not seeing the value, or they're getting lost, or they don't trust the AI. Trust is a big part, like we discussed earlier.
Hmm.
Once you have that, I think then, of course, go fully launch. I believe product market fit is the number one reason why 84% of seed funded startups don't make Series A, right? They do not get
Hmm.
to the next level of growth, and some scale too early. I know VCs who are funding companies without product market fit, think sales and
Hmm.
marketing will take care of it. But I think we are gone from the dot-com days where just eyeballs or more marketing, will bring in the revenue. It may last for a few months, but very soon you turn out that your um, cost of sales is so high because the product
Hmm.
market fit isn't really there. We're spending a lot of money on marketing and sales, but if you have the
Yeah.
right product market fit, then putting money in
Yeah.
sales. I will double down, triple down once we have the product market fit. But in the
Right.
early journey, I think working with initial set of small set of users, getting them to iterate with the product, listening to them, learning how they're using it, I think is the most important part. And so we help coach founders do both, get the product market fit, think on your
Yeah.
go to market plan, but really execute on that once you have early signs of product market fit. Means the application usage is increasing, and you don't have to be in every demo or in every room
Huh.
uh, before the next user comes on to start using the
Yeah.
product. That is a very good early sign that product market fit is starting to work. Other users are joining in without you actively having to sell, because users are telling other users, hey, use this, it made my life easier.
Yeah.
If that happens, then I'll double down, triple down on the sales side.
Perfect, perfect. And what about the pricing? Like, there is a freemium model, and we charge from the beginning. Like, say Tesla, they started the high price, then they decreased. Some people do the reverse; they start free and decrease. Say, taking example of, I'm just putting you on spot of this podcast, for
Yeah,
example, as a product for me, right? So I started free, and a lot of people are reaching out. Now I don't have bandwidth to do it. I have to tell no to a lot of people because they're just reaching out, saying, "Okay, you're talking good. Let me do a podcast." But I cannot just tell. Then my days will be filled up with podcast. Plus, I'm not getting revenue of say marketing or ads from other companies. It's good for networking, but I have to network the right people also, right?
yes.
So what do you think is that pricing game? Because pricing is the lever for marketing. The freemium model, free, will get you a lot of customers. Like we had the Palo Alto event, like about 1,000 people signed up, but a lot of people didn't show up because it was free. If you made
Yeah.
them pay $20 also, they will come because they will lose that. So what is that pricing versus product market fit? Should you make it free to a certain extent, have the users use it, give feedback, and then slowly monetize it? Or what is your point of view on that
Yeah,
pricing versus premium?
look, I think I'm not an expert on podcasts, but at the same time, I would think most companies would uh, not just think about premium or freemium and so on, just from a
Yeah,
pricing perspective, but figure out, what the real value the end user is getting out of that freeness, right? So
right.
whatever that is, and even if that
Yeah,
value is more than one use case where it suddenly has made them learn something new that they didn't know before, or it has suddenly made
yeah.
the person understand that they can get a wider set of audience through your podcast, for example. Understand
Hmm.
what that audience is, who more are they able to touch. For example, somebody like myself, if I
Yeah,
have more founders coming, right, based on the
yeah,
podcast and so forth, there's
yeah.
automatically a value built into that freemium,
Well,
right? Then you
right.
say, so I don't look at necessarily from a pricing perspective, because that's sort of the price is the ultimate decision maker, but I look at from the value perspective, whether it's freemium or
Hmm.
whether it is a
Yeah,
$1,000 podcast or
I understand.
$100,000 podcast. What's the value the audience
Yeah,
is getting from there? And that will
yes.
automatically turn yourself into what the right pricing is. Yes, and I think freemium is mostly an introduction. We're seeing this very well in the what I call the AI for the prosumer world, professional consumer world,
Hmm.
where these companies are starting out saying, hey, here's a product, and you have daily 50 tokens free, so you can start the product for free, but if there's
Yeah,
value in it, immediately people will upgrade to the next level, right? So I think
correct.
of it as a value question as much as it's a price
Value.
question.
Right, right. Right value
Does
and
that make sense?
engagement. Yeah, yeah, it makes
Yeah,
sense.
and you
Like
have to see the
engagement,
value
yeah,
both ways, both
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 ways.
on your audience as well on the speaker side. Yeah.
Right, right, right. Yeah. Yeah. I mean, product will automatically sell after that. After we need not be worried about the profit. Yeah. That's a great answer because, yeah, the engagement, market, and value is important before we turn profit. Because a lot of companies are not even profitable, but still their asset is worth it. Definitely, yeah, that's a good answer. And let's go to the your investment thesis, thesis here, Vic. So you, Sunil, and Amar, started in enterprise investing in enterprise software companies. You have been investing as angels before, and you like formed a group, this G2C Ventures, or like how? What is the philosophy of your investment on ventures? Like, do you see a particular traction? It should be fund. I mean, it should have a paying customer. Also, you do pre-seed, or like you do at the idea stage. Like, where do you really pitch in to invest?
Yeah, we are actively doing pre-seed, seed stage. So yeah, this is definitely pre-product
Okay.
in almost all of the cases. In many cases, even the founder has an idea and they have looking for their co-founder and just validating the idea. So we start meeting entrepreneurs very early.
Okay.
And our philosophy really is that we're looking for very strong founders, either second time founders who are eager to partner with us, or first time founders. What I call them is, have a little bit craziness in their mind. They
Mm-hmm.
believe they can be a huge company right from the start. They're not thinking small.
Hmm. Yeah.
And they, have either some domain expertise or some
Yeah.
accomplishment in the past that tells us that there is a drive behind this craziness. It's just not craziness in the thought process, but actually there's a
Yeah.
drive. Some of them have a chip on their shoulder because they've helped other successful companies, but they're thinking to themselves that they were really the core engine behind it,
Hmm.
and they can do this on their own. So we look for a lot of first time founders. We've had huge success in our past with first time founders. In our fund, we have had about uh, three IPOs, about seven companies who are in unicorn status. These are the angels that we've been part of. So what we really look for is similar sort of profile of founders who have this sort of crazy idea that they can be super successful in what they do. Help them identify, have already identified a problem, and then we really help them build what is the core set of initial traction that they can get within their network on their own,
Hmm.
right? If we
Hmm.
have to help them at every step, then they may not be successful beyond the first 10 customers. So what we really want to see is what is their drive, and then can they get some traction on their own. We help them formulate a little bit how to get the traction from pilot
Hmm.
to maybe a paying paid pilot, to go from five friends customers to 50. We help them with some of the playbooks that we have developed, especially in this prosumer world. uh,
Huh.
but other than that, we're looking for founders who are very eager and have a drive. And then we help channel them with both our capital and three areas where we help the most: product market fit, go to market strategy, and also
Hmm.
we help them a lot on the fundraising side, both ourselves as
Hmm.
putting our own money, but also helping them with the fundraise, because fundraise itself is a process.
Right, right, right. I mean, definitely helpful because founders need that, and you see, I believe you see the potential of the founder for if it is first time, like what's the drive and how much he has done himself before coming to you. And I don't want to go deep on the revenue side. You already told like may not have a revenue sometimes, but you should have got some traction, right? Because
Traction
revenue
is very
takes, yeah,
important. If you
yeah,
have a great idea and
yeah,
you're the only one with that great idea, then
yeah,
we actually coach founders that you got to go and talk to 100 people, and they say, "Why 100? That's a lot of people." I say, if you haven't talked to 100 people, then
yeah,
mostly by the first 20 or 30, you don't even have your story right. You take too long to even tell your story, the problem, solution,
right,
and so on. So by the time you
yeah,
talk to the 30th or 40th people, the story is right, but still not everybody is buying it. By the time you get to
yeah,
the 60, 70th people, you start getting the story more in line with what would be more genuinely make sense. Not just a great idea that the founder had, but a great
yeah,
idea that a lot of people start agreeing to it. So by the
yeah.
80th, you start thinking about who could be my early users or early customers for this. So that's why we say to them, go talk to 100 people. And
Yeah,
if you
that's
don't
very
know that
important.
many people, then don't be in this business.
Right, right.
But you need to have some traction, and you also need to be meeting people who are not just your friends, who will be giving you
Right.
the honest feedback, and not that, hey,
Yeah.
Vic, that's a great idea, or that's super interesting, but like, no, I don't really think that's going to work, or here's a reason it
Right.
would not work. Listen to those people
Yeah.
and continue to tweak your idea. That's why I say by the 80th, you will start signing up some early users. And
Yeah.
we encourage the founders to do that a lot. And if they can do traction on their own, then frankly, they shouldn't be
Right.
in the entrepreneurship
Right.
business.
No, definitely agree because go-to-market traction marketing, that is fundamental, and you have to keep networking. And a lot of people will tell no. I mean, a lot of people reject your ideas. You need not be discouraged. It's not for everyone. Obviously, you will have some
Yeah.
supporters and a lot of
A
no's.
big part of what I tell him is
Yeah.
take the no, but
Yeah.
ask the why no. Because
Yeah.
I think there's
Yeah.
some hidden jewels written in that why, because either they
Yeah.
did not get the point and you can then move on, or they sometimes people tell you a very good reason for a no.
Yeah.
And that may be the reason to pivot a little bit from your,
Hmm.
grand vision idea to something that can immediately be useful. So I see also
Hmm.
founders with grand visions, but they don't
Yeah.
have one use case that is so compelling that people say, hey, if you build that for me, I know 50
Yeah.
people who will start using it right away. And
Hmm.
so ask the reason of why and take it
Right.
with, like what you're saying, don't be disheartened because there's a no,
Yeah.
but really focus on the why no. And I think why is where a lot of jewels are hidden in terms of
Hmm.
a lot of people just say no and then they start defending and move on. But I would really ask for why no.
Hmm, got it, got it. Okay, let's move on to the topic of the podcast. You said like grit to capital, right? See, most founders they have a grit. They until they hit their first well. Like say somebody told like Tyson told, I think you never know what to do when you get a punch in your face. Like when you get a punch in your face, you are blinded, right? So how do you distinguish between persistence and stubbornness? Like a bit of a founder, obviously.
Yeah, no, I think first of all, grit to capital is really the theme of our fund.
Yeah.
Is if the founders have to have a grit. I mean, one type of grit is just working 80 hours a week minimum and pushing for
Mm-hmm.
rejection. I think that is natural for a lot of founders. And if you don't have
Hmm.
that, again, you're in the wrong business, right?
Okay.
Because doing a startup is hard, right? No matter what you read in the
Hmm.
press releases and magazines that definitely
Yeah.
glamorize this world, but founder is a difficult, hard, and at times lonely journey initially, especially in the
Yeah.
initial days. Uh, but
Yeah.
also, I think there is another type of grit, which is what I call the revenue scaling grit, which is
Hmm.
systematically solving problems that you have never seen before, even though you knew the problem in your domain and so on. But the
Mm-hmm.
problem of company building are very different. And that requires
Mm-hmm.
a very different type of grit. That
Right.
require not just heroic effort. We were kind of discussing that earlier. You don't want to be the hero in the room. You're
Hmm.
actually an execution person who actually can sustain that execution via different people. That kind of grit
Hmm.
requires trust building beyond working hard, beyond taking rejections. That type of that kind of grit takes also being very intellectually honest to your own self.
Yeah.
Many times meet a great founder and I tell him, let's go for a walk because, we
Huh.
are no longer in a boardroom or office conference room talking about a deal. I really
Hmm.
want to have them think about a pivot in their idea.
Hmm.
And that requires an intellectually honest decision that a lot of times people don't want to have with themselves. That's what I call the real great is having that intellectual discussion with yourself, with your
Yeah.
investors, potential investors, even with your team to say, hey, this idea of ours, we think is a great idea. Right now,
Hmm.
we're not getting any traction. What
Yeah.
can we pivot to get traction so we can come back to the vision, right? Because just because I had a great idea doesn't mean other 100 people think the same way. So the other than the hardworking and taking rejection great, it's the revenue scaling great, which is what I think the
Hmm.
differentiates between just stubbornness and persuasion, right? The stubbornness is I'm going to keep doing this hard work over and over again for the next 5 years, Or
Hmm.
persuasion is I'm going to go and have a real discussion with myself. Why is this not working? Be able to pivot and doing all of those
Yeah.
other things that require a lot more trust building with your team, with yourself, being open and honest. And I think that, see, those kind of founders are able to get to 100 million ARR type business,
Hmm.
not just because of their hustle, but because they can scale their judgment. They were able to scale their judgment with their other team members and even
Okay.
investors.
Uh-huh. No, definitely agree because you have to take advice, you have to pivot, you have to talk with your investors because everybody's in that game. If you are like, yeah, there is a
Yeah,
saying
you're on the
like, if,
same team,
yeah,
right?
same
You're just
thing.
playing different roles, but you're on the same
Yeah.
team.
Yeah, go together. There is a saying, right? If you want to go fast, go alone or something,
Yes.
right? Go fast, go together. Sorry, I'm missing it. It's a very common one, cliche.
Yeah.
So we have to go together, but definitely you said interesting point. Founder's journey is lonely, and the more network you build, you make it interesting. You talk. So we are doing a lot of conferences and podcasts. So you get a lot of ideas. Plus, you spread that idea to others. So others contact you. They contact you, me, everyone, and they know. Okay, I mean, they know diverse perspective or building one thing, right? Then you can decide what makes it right for you, your case. You are the
Yeah.
judge. You are the judgment guy, but you have to take diverse perspective. That's an interesting answer from you. And let's go to your just like grit to capital. You said like I mean we I want to understand more on the investment philosophy of yours. Like you're not just check writer. I was talking before. We also talked in Palo Alto, right? You want to help the company builders. Obviously, not handhold them, but help. So, how have you operationally helped a portfolio company till now? Maybe you can, if you can give me some example. Have you done something recently where you have helped a company to scale, or so people can reach out for similar use cases?
Yeah,
Like,
no, you're right. I mean, we are operators turned investors, right? And I call
yeah,
ourselves engineers turned operators turned investors. So we've kind of been
yeah,
in the exact same journey that a
hmm,
founder is going through, just at a different age than us, right? Myself, Sunil, Amar, we all been in that, co-founders of the fund. And I'll give you a very simple example. We were working with a company, one of the portfolio company that had early good traction,
hmm,
growing, but at the same time, the customers were asking for a lot of custom integrations. Now, typical investors and so on would just say, "Hey, move on. Don't do custom integration. You got to move
hmm,
fast and grow and so on." But we can actually roll up our sleeves and get a little bit deeper into the problem and say, what does really mean by custom integration? Why does it taking them 3 months or in some cases 6 months because an enterprise app needs certification, whatnot,
hmm,
to get this
yeah,
custom integration? The founder,
yeah,
of course, want to say yes to all the customers because they want new customer to sign up, but that is
hmm,
also not a recipe to scale fast, right? The salespeople are saying, hey, if each deal takes 6 months to just deploy,
hmm,
then they can't scale fast enough in terms of revenue.
hmm,
So there's a lot of friction around that. And what we did was we
hmm,
kind of got, them together in a conference room, got under the hood,
hmm,
and were able to, over maybe a 2 or 3 hour long lunch, be able to really figure out that, eventually there were three most common integration patterns
okay,
that customers were asking for. Think of them as like high, medium, low level of integration with different apps. And rather than building custom integrations, we out of
hmm,
the box created a different preset connector that address this problem from 3 to 6 months to 2 weeks of integration, if that's all is needed. And as simple as it sounds, it
yeah,
wasn't that obvious when we first got into that lunch meeting together,
hmm,
discussing sales issues and we were discussing deployment issues, and what really got down to was, hey, can we change the way we are offering integration to our customer, and rather than doing something custom for
hmm,
each customer's ask. And that kind of made the founder happy, the sales team happy, and even the engineering team happy. And that's kind of one of the
yeah,
examples of, we're not just writing check. We, of course, helping do that. But in addition, we can roll up our sleeves and help provide a scalable solution
Yeah.
and think through that. And when somebody say, "Oh, three integrations wouldn't just cut it," we can have a
Huh.
real intellectual
Right.
dialogue with that engineer or that
Yeah.
project manager to say, "Well, give me a good reason why,"
Huh.
and not so much convince them, but have them see it for themselves that maybe this is a better path for the company rather than doing custom again. And early on, startups are very,
Hmm.
not very all the time able to say no to a customer
Right.
because they barely have 16
Yeah.
customers. So they can start saying no yet. Yeah, once they have about
Yeah.
100 customers, so they can start saying
Right.
no. So in this case, we were able to help them out. This is an example. We're not just writing checks, we are actually helping
Yeah.
them strategize on scaling.
No, no, that's great, and especially you're from you're a CTO, so you understand tech. But a lot of founders they don't do that. Like, I mean, not founders. Sorry, I'm mistaking this. A lot of VCs don't handhold the founders. Like, you're a little bit different. Like, how are you so different from traditional VC economies? Because they just invest and maybe they will do some introduction, but they're very busy, to get involved in such kind of
No,
nitty-gritties. Like,
Actually, you're right. I think even a lot of time founders
yeah,
don't wanna listen
yeah.
to the VCs either. So that's where the trust building comes in,
Maybe,
right?
yeah.
Before we even invest, right? It's not so much the investment due diligence, but
Hmm.
can we build a rapport, personal trusted relationship with each other.
Hmm.
I'm not necessarily a big on I must be on your board, but I definitely want to be somebody who you can trust, regardless of whether I'm on your board or not.
Hmm.
But you're right. Like when we spend that time with that company, arrange the lunch and so on. What we
Yeah.
were really doing was, regardless of what a lot of VCs do, is hey, I invest in X number of companies a year. I have 30 to 40 companies to manage. I can
Yeah.
spend so much time. We don't think like that right now. We
Hmm.
primarily think like, look, we are going to win if this founder wins. That's really the base
Right.
economics of the VC world. So
Right.
we're not looking at this as, I can only spend 2 hours a quarter with this company. We're looking to them and saying, regardless of the VC economics, that's very traditional, we
Yeah.
want to take this founder call at 10 p.m.
Yeah.
And not think about my time allocation, but more think about how to solve the specific problem. And that kind of lends itself into if I can solve the problem, I know somebody within our CXO network can. So most VCs will just make a nice warm introduction. They'll say, "Hey, meet Aswajit. He's a great founder," and blah blah blah. Right? Our email
Hmm.
will read something very different. Right? We will be saying
Hmm.
more specifically like, "Hey, meet Aswajit. And I know you have solved this problem in your past. Aswajit is struggling with something similar. Can you help
Hmm.
them out?" And so there's more
Hmm.
context to that warm introduction.
Right.
And then if they
Right.
say, "Yeah, that'd be great. Can you help me facilitate?" We will actually help facilitate a meeting or a call so we can
Right.
ensure there is context of that introduction, and then they can work one
Huh.
on one or together.
Yeah.
So we're going beyond and taking that extra step that the handover turns into some realities, and vice versa. If the CXO is really interested in helping them through, whether it is trying their product or helping them
Hmm.
do a different trajectory, we ensure the CXO has skin in the game because
Right.
then there's interest from both sides.
No, definitely agree. And you have like 100 plus CXOs we were talking last time, right? Like you have so many CXOs that helps others. Like, so you don't do just warm introduction, it seems you help activate that network. Like, how do you get so much time? Like, what is your ratio? So it seems like you go deep dive, you choose some founders and really help them, not like spread yourself too thin by investing so much like beyond your capacity and less investment, but more on a particular founder really help him be successful. I mean, the
Yeah.
probability of winning is high.
One
Higher.
of the unique things about the fund of our size, and this probably very unique to G2C, is there's three
Huh.
GPs in this fund. So myself, Sunil, and
Okay.
Amar, all are hands-on. folks,
Yeah.
and generally that doesn't happen with our stage or size of our fund, frankly. So, it makes it
Hmm.
very, very unique. If I was a solo GP,
Hmm.
I wouldn't be able to do it. If I was a GP with two
Right.
staff members, I wouldn't be able to do it. But because we have three,
Yeah.
uh, GPs within this fund, we are able to give that extra time. We are able to give them, and look, I've been a founder, so
Hmm.
it's not like a 4 hour, 6 hour day is enough for me.
Hmm.
I mean, this past Labor Day weekend, I
Hmm.
probably had three walks with three different founders because they're in different part of their journey. I had two walks with one of
Yeah.
my CXOs, or had a coffee with them when
Yeah.
I met for dinner. So we are, engaging socially outside to build that trust, to
Yeah.
build that network. And all three of
Yeah.
us are doing that. So, it's really the power of us three, kind of, three of us kind of make three plus three,
Yeah.
into nine,
Nice.
not just individually. Yeah, I would not be able to do it if I was a solo GP. And that's an issue with
Right.
a lot of other small funds out there.
Right, right. That is 3x and with 100 CXOs, obviously 300x.
Yes, that's
Just
exactly
kidding.
right. Exactly right.
Just kidding. Yeah,
Well said.
Like, yeah, it's the power of numbers, sheer numbers. But a lot of people have, I'm just going a little bit deep on this topic. I might be stumped. A lot of founders have trouble. Like obviously within VCs, there is always a coherence, or like you have a set of standards. Okay, no, no, no. This is like equally divided. Like maybe if you can give me 1 minute on that. You never had misunderstanding between the GPs. It is always
No,
you
no,
decide
I think
on one
we
founder.
stay. I mean, we have a lot of our meetings. We have good trusted relationship with between
Oh,
three of us for the last 10
hmm.
years. We have
Oh, okay.
helped other founders for the last 10 years, so we kind of understand the founder dynamics. That doesn't
Yeah.
mean all three of us agree all the time.
Right.
In fact, our even fund making decision or introduction making decision, is not on a consensus of all three. We don't all three have to agree on every deal.
Yeah.
Two out of three is good enough. So we kind of take that starting
Yeah.
out that we are all, have different definition uncertainties in our head.
Okay.
And every situation we come across, there's always an uncertainty to solve for, whether it's a product or a deal or on a
Huh.
founder or how big the market is. But I think
Huh.
collectively, if we two of us come to a similar decision, we go ahead and execute. And again, being a founder, our execution may require some iteration of our execution. So that doesn't mean
Okay.
it's one and done. It may require us to come back and iterate, and that's where I think makes our magic bigger, the 300x that you were talking about earlier.
Okay. Okay. No, got it. I mean, because that's the core of any company, any VC fund or a company, right? The founders and the main core players have to be very coherent. That's why the question. But yeah,
That's correct.
definitely interesting. But you have a big relation. I mean, the time you have spent with each other also matters a lot. I mean, definitely you have that good fortune of having that very good circle with you. Okay, let's go on to. I think we discussed a lot of technical stuff. I know we're closing on around 45 minutes. Try to wrap it up with my personal favorite rapid fire round. Are we all set for that, Vic?
Yeah, I love to do that. My favorite
Okay.
too.
Yeah, okay. Let's go on. So, yeah, I asked few guests in my show about a personal favorite holiday destination, but I want to ask you a little bit different. Like, obviously you're from Bay Area, so don't tell me anything from US. Have you visited anything outside US which you obviously you have been here from 30 years almost, right? So
Yeah.
you would still have visited something outside US, and is it always your personal destination is related to business, or you find some place really interesting where you can do business as well as it's a personal holiday destination for you?
I
Like
mean,
that.
I do mix a lot of work and vacation at the same time. Sometime may not be uh, agreeable
Hmm.
to my family all the time, but I do
Yeah.
try to. I travel a lot.
Hmm.
I love, for example, Stockholm. I worked there.
Hmm.
I've had clients there. I've had other companies which I've been heavily involved there. I love that city. Love the
Stockholm.
his
Hmm.
history, but also, it kind of smells a little bit like Bay Area. There's a lot of young
Is
people
it?
and energy there. They call
Hmm.
themselves sort of the Silicon Valley of Europe. I'm sure a lot
Oh,
of
is it?
other cities in Europe would want to compete with that, but at the same time, I see them. Very down to earth, easy to work with, very
Hmm.
grounded folks. If outside of Bay Area, that's a great destination both for travel and for work. And also, they are
Hmm.
open to
Oh.
experimentation with technology, experimentation with food, with culture, with
Huh.
music. So it's just not
Oh.
one thing. They're very proud of the
Stockholm.
Swedish culture, but at the same time,
Huh.
because I think like they are the largest, the biggest city in relatively small country.
Okay.
The whole country's population is sort of size of Bay Area, and within that,
Huh.
Stockholm being the biggest city, but they really try hard to be more welcoming about new ideas. I know there's this old
Yeah.
tradition about being consensus driven about everything, but I've seen also
Huh.
have them change a lot in recent years. So Stockholm is a
Huh.
great
Huh.
one.
Is it
Uh,
part of Nordic, Vic?
yeah,
Nordic.
it's part of
Nordic.
Sweden. Yeah.
Sweden, Nordic. Okay, yeah, yeah. I've been to Brussels, and Europe is a, yeah, small countries. Like Bay Area is a country. Yeah, obviously. I mean, that's
That's true.
awesome, man.
That's very true.
That's awesome. How many countries can be in US? Okay, cool. I mean, Stockholm is your favorite destination where you like to explore startup ideas, as well as, I mean, you love the city itself, the scenic beauty and stuff.
Yeah,
Okay, let's
I
go on
mean,
to
another destination, of course, is Bangalore, right? I've worked there
Bangalore.
a fair
Okay.
bit. A lot of startup energy, a lot of young ideas,
Yeah,
young people with
yeah,
ideas, and I think a whole spirit, especially that I've seen in the last 10 years, that they
yeah.
want to conquer the world.
Yeah,
I think there's great cities around the world like that
yeah,
where people are really
right.
looking at the way I look at it, they're really looking at
Huh.
solving tough local problems and global problems, and I've seen that very actively both in Stockholm and in
Hmm.
Bangalore personally.
Yeah, coming to Bangalore, I was seeing a survey yesterday. It has 10 times more AI companies than any city in India. Like, not even close any city is,
I'm not
unfortunately.
very surprised, and I think
Yeah.
that entrepreneurial bug is definitely there than some of the other cities. When it used to be a time people wanted to work for big companies. Hey, I'm so proud. I've been hired by Google, or I've been hired by the
Hmm.
largest bank in the world and things like that. But now I think they're more proud that they've been hired by a startup. So which I think has changed the
Okay.
mentality of people, and also a generation
Yeah.
that thinks that letting people choose the ownership of their own career is better than some large company defining what their
Hmm.
career is going to be. I think that's a
By
huge
the
shift in
Yeah.
Bangalore.
By the way, Vic, I'm selling a couple of flats in Bangalore. Why don't you buy one of them?
Absolutely.
Seriously, I have to. I'm trying to sell one at least. Let me know after the call. We'll
Yep.
talk. Okay, let's go on to some interesting question on drinks. We had good, not you didn't drink too much, but you had couple of sips in the last conference. So what do you like to sip, when to get some ideas or like get through some mind-boggling ideas to your head, or say you're solving some deals, or like there's a crisis call, something spikes you up or make you not high, but makes your brain high.
I mean, one of my go-to drinks in case it's a tough day is a whiskey. I like whiskey. One of my favorite whiskey is Macallan 18. It's a good
Callan
whiskey,
18.
and that whiskey, I think there's something about just a slow pour makes your days kind
Okay.
of slow down and make it right. A
Oh,
slow drink. It's not a drink that you drink fast.
okay, yeah.
And it just sipping it slowly and rolling it in, it kind of helps you think clearly, especially when everything else is on fire, and the drink kind of
Okay.
brings it home for you, for me. So if you haven't had it, we'll have to have it together when we meet next
Sure.
time.
Definitely, definitely. That's what I'm saying. It will be more. We'll discuss some controversial topics then for 15 minutes. Okay, let's go on to
There's plenty of
your.
those to go around.
Yeah. I didn't want to make the first one like that. Like a lot of things between Elon Musk, Mark Zuckerberg going on. We don't want to spike it up. Let them handle it.
True.
Okay, let's go on to some couple of questions before we wrap it up. It's going on to be, yeah, 1 hour. So, what is the biggest misconception about VCs that actually they do all day? Like, what do you think? What VCs they do all day? What is that people think? What is the biggest misconception about that with the
Yeah, I
VC?
think about the VCs. Yeah, no, I think that I've learned this very quickly here, and that's even true from my own wife. I think VCs sit there and judge people all day before they invest money. But I'm seeing that
Mm-hmm.
the world of VC is a lot more collaboration between various stakeholders.
Huh.
Founders, number one, industry, subject matter experts, number two, CXOs who are actually looking to get the problem solved. Number three, I see a lot of work a lot of time goes into that. And then
Hmm.
collaborating with other VCs, I love it. It's such a collaborative business.
Yeah.
We chase after the same deal, and a lot of time, whoever wins the deal may create a syndicate, and then I could still be part of a deal if I've lost, or vice versa. Even if I won, I may create a syndicate and let other VCs come share the risk and share the network with my portfolio company. So it's a
Yeah.
very collaborative business. People think that VCs are pretty blind in what they're investing in, but a lot of the
Hmm.
VCs that I work with do a lot of due diligence, not just in
Hmm.
the company, but at least at my stage, a lot in the founders, right? How they're going to behave when things don't go right, how they're going to
Hmm.
behave, and that doesn't just come in a conference room meeting. That requires a lot more one-on-one sessions. So. Uh,
Yeah.
but at the same time, I've seen VCs like right now in the height of AI, investing in AI without thinking how will it ever be deployed. Investing in AI
Yeah.
because somebody had a cool demo, and which
Yeah.
I think one of the one of the things the VCs industry has to get right is not just
Hmm.
invest on the hype, but invest on
Got it.
something from my perspective that is deployable.
Got it. Got it. Perfect. So let's go on to one more. There's a question asked to Sachin Tendulkar. I'll ask that. So, if you're not playing cricket, what would you have been in this life? But you have done CTO, you have done engineering. If you're not a VC, what would you do
My
now?
first job that I ever wanted to do was be a fighter pilot. That was probably I watched the Top Gun movie when I was in high school. This is the first one that
Uh,
came about, right? And I thought I will be
Actor?
a fighter pilot. That's what I wanted to be
Oh,
in my life.
fighter pilot.
Uh,
Okay.
and
Mm-hmm.
uh, that didn't turn out to be the case as I got glasses and
Hmm.
I don't have a perfect vision, so that's what was required to be a fighter pilot. So moved on to engineering and here in the VC world, but enjoying it. But I love the thrill of a fighter plane, and
Yeah.
have tried couple simulators and a ride at some of the air
Uh,
shows, but that's as close I've gotten to it.
you could, I thought like from Top Gun, you wanted to be actor. You're handsome enough to be actor. I met an actor the other day and I was doing some Airbnb. He was like, we were talking about AI movie. He was like, acted in 20 films. Oh my
Actually,
gosh.
you could be, you probably can be very well be an actor.
Oh, I did some acting in the school stage though.
Okay,
Never after that. Yeah, we'll produce something. We'll produce an AI movie.
absolutely.
Okay, Vic, let's talk about that in our next drinks. For now, we are discussing a lot of stuff. I don't want to take much of your daytime. Let's chat at a later point of time. Really thankful, really fascinating discussion we have had today. And let's keep doing. And if you have any interesting suggestion, guests, or networking session you want, we'll do it again.
Thank you,
Thanks.
Sujit. I think you've been a great partner, and I liked the way you put together these questions. So surprised me on few of them. Thanks for your time, and look forward to collaborating with you again.
Thank you. Have a
Thanks.
great day, Vic. Bye.